Welcome back to Market Day Report. I'm Scott Schultz, otherwise known as the Cow Guy. I've been in the markets for a long time, but this is one of those days we come in and boy, oh boy, things are kind of rocking and rolling. But I will say this, we're getting a little bit more immune to the situation each time this happens because we generally do have a story in these commodity markets. So let's get to that story. Let's see what's happening in corn. We have a big market sell-off in the equity markets, but it's really not affecting corn too much. We are a little easier and showing some weakness here. That's because we've gotten, the crude oil market's been slaughtered. All right, so we've got March corn down 4 cents, 5.89 1/4, while May is off 3 3/4 cents at 5.90 1/2. Let's move right along and see what's happening to soybeans. Soybeans have been higher in the day. They look to be giving a little bit back here. Well, they're holding in there. Jan's up 4 1/4 cents at 12.89 1/2. March is up 3 1/2 cents at 12.92 even. But look at the lows in the day. They're about 12 cents ago. So we had been much lower in that soybean market overnight. Let's take a look at Chicago wheat. Now, this one has been on both sides of the board. We're going to be mixed here. Let's just call this, I like to call this the smorgasbord table because there's a little something here for everybody. How about that? March is up 1 1/4 at 7.76 1/4. That's the Chicago wheat market. May is sharply unchanged, as they say on the floor, 7.78 1/2, while July is off 2 cents at 7.67 3/4. So a little something there for everybody in Chicago wheat. How about Kansas City wheat, that hard red wheat in KC? Look at this. Boy, showing some strength. March up 2 cents at 8.12. Look at where the low was, 7.93 3/4, right? So 16 cents ago, roughly. May up 2 cents at 8.12 1/4. So I'd like to give you a little bit of perspective there because when things are given to you in perspective, you get an idea if we were, knowing where we've been and where we're at now. So let's take a look at that spring wheat in Minneapolis. This is one's also another mixed board. March off 2.5 cents at 10.20 even. We've got May off 2 3/4 cents at 10.09 1/4. But we do have July higher in the day by just 1 tick at 9.82 3/4. And then lastly, this one's been a little bit sick. That cotton market's been taking it on the chin here recently. March is off $2.80, I'd say $2.80. That's 104.50, just off the lows in that cotton market. So cotton's still struggling with today's trade. Let's bring in Todd Horwitz from Bubba Trading. Todd, welcome to the show. Good morning. Thanks for being on. He's coming to us from Chicago, and one of his many, many homes dotted across the globe. Todd, look, it seems like every Monday morning I come in, the world's ending, there's a new variant, and the only thing I can't agree with is this, and I'm going to let you take it and run with it, but I think the market's I think Omicron is a Trojan horse, and that's what the headlines are going to be, but I really think this is about, we have a weakening economy, and the Fed's thinking about raising rates.
Scott, I couldn't agree with you more. I think that you're going to have to raise rates. As I've said before, you've got two choices. You either go back to fracking and shale producing and forget about the Green New Deal, which they shut everything down for a while, or you have to raise interest rates. You can't have both, and you can't have low rates with soaring inflation, which is so much higher than is reported that it's ridiculous. And now I'm understanding we have not only a high oil prices, but we have a shortage in fertilizer as well, which is going to create more problems. All we're doing is trying to duck the issue and create more problems without taking care of and meeting them head on. And one thing I know, Scott, you cannot borrow your way out of debt. You have to meet the debt head on. And until these guys wake up and say, we either have to go back to producing and bring oil back out of the ground here in the States and become a net exporter again, in which we can pay off some of our debt, or we've got to raise interest rates.
Well, two things. Yeah, I agree with you. We're both in the same camp, but look what's happening to crude oil. I think corn's holding up pretty well with what's happening in crude oil, and crude oil is doing what it's doing because we've got some leaders that still think that lockdowns are a thing. Right, because they're not a thing anymore, but that's by the by. So we've got crude oil really taking it on the chin here today, but corn is doing okay, holding up. And then the other thing I'll say, and I'll hand it back over to you, is that I kind of think that I look at it like this. I have to dumb it down a little bit because I'm not that bright, but it looks to me that the Fed's got two choices. They can let inflation run rampant and they can kill the consumer, or they can raise rates and they can kill the economy. Either way, it's their Afghanistan moment. They have to be very careful.
They're going to do both, most likely, because the Fed has never made the right decision.
I don't know why I laughed at that.
To comment on your well, it's true. And your comment on your grains, the grains have looked remarkable today when you think about it. Soybeans are down about 7 cents, are now higher, and wheat was down about 15, and that's now higher in the day. And corn, look, it's a little bit lower, but it's been the strongest of the group, so not a surprise. but the Fed is going to kill the economy because they didn't address this a long time ago when they had the chance. They let the market people dictate to them what should be happening. They let the government dictate to them what should be happening. And the only good thing that President Biden has done is when he reappointed Powell, but because he is the lesser of two evils, the devil you know versus Lael Brainerd, which is who the progressives wanted, who would turn on the money faucet and walk away and bring in that universal basic income, which is what they're trying to strive for anyways when it comes to these markets.
Right, they are. And UBI, universal basic income, what Todd's talking about is, they just want to pay people to stay home. It sounds like a good idea, but boy, they just take the heart out of the country with that one. All right, we're going to go away. Todd, don't move. We're going to pay some bills. We'll come back and talk livestock with Todd Bubba Horwitz in Chicago after this. Welcome back to Market Day Report. I'm Scott Schultz. I'm in a perky mood. I've been off a week, so it's good to come back, but it's not good to come back to markets like this. We've got that Dow just getting slammed today. We've got crude oil getting slammed today. That's on the talk of more lockdowns, and whether you like them or not, that's going to be a difficult one for this economy to kind of get over. Let's take a look at what this economy is doing via the livestock trade. Let's take a look at live cattle. The cow guy likes to talk about live cattle. That's me talking in the third person, too, which is kind of weird. But anyway, let's go with it. February, this is a smorgasbord board, right? We got a little something here for everybody. Feb live cattle up one tick at 2 cents higher at 136.45. April was unchanged. Now Feb's unchanged. Well, April's down at 2 ticks at 140.57. But I can say right now, but the range and the change are both as small as they are today. That market is firmly in a holiday trading mode. Let's see about feeders. They were easier today, but they're coming back just a tad here. Jan's only off 70 cents at 159.55. March is off 97 cents at 160.72. So maybe that's due to the fact that we've lost another penny or so in corn. That's given this market maybe a little bit of a spark. We'll see if that can hold. How about lean hogs? Lean hogs are taking it on the chin in that front month Feb market. $1.37 lower at 79.42, while April's off 97 cents at 83.80. And that's a great segue for me to bring back in our guest, Todd Horwitz from Bubba Trading in Chicago. Todd, what about the feeder? Well, let's just say livestock as a whole. We have cattle on feed and hog and pig report coming up on Thursday. Maybe we're just kind of jockeying for position before we get into those numbers.
Probably, Scott, but also remember it is holiday trade. And remember this. The high prices that we're seeing, not necessarily at the wholesale level, but at the retail level, it's hard for people to consume and continue to want to buy this stuff because, again, you have to watch your budget. This relates directly back to the inflationary times that we're in. And you go to the store, you get, you get the same package except that it's half the size and you're paying the same price. And that's going to cut down and that's going to hurt farmers and producers on prices, plus the fact the supply chain is totally corrupt and broken down. I mean, we have to get our act back together so that we can see the proper movement of everything. And right now, without people wanting to work with the whole ordeal that is going on, it is only going to create bigger problems. And this is what's going on. But it is a holiday week as well. So throw it all together, and you get markets that are relatively flat and unchanged, slightly lower.
Yeah, that's a lot. That's a mouthful, but you're right. And like I said, the Fed's got an unenviable job, and a lot of it is self-inflicted. But with this runaway inflation, do you want to kill? You want to kill the consumer by letting that run wild, or do you want to kill the economy by raising interest rates? And Todd, I've been doing interest rates my entire career, and it's the first time ever that I've talked about interest rates being risen. Interest rate rises in the fact, while we're seeing the economy weaken, which is just not a good, that's not a good thing. So appreciate you being on. We got to some great points there. We should have you on as much as possible. That's Todd Horwitz from Bubba Trading in Chicago. Bringing it back over to Nashville. So I can throw this one now back over to Tammy.